What do you do when the industry you've specialized in for years suddenly goes into a long-term secular decline? That's a very tough question. It's one that video game retailers like GameStop are facing right now, as more and more people just download their games via the internet. Why go to the store to buy a physical copy of Call of Duty Black Ops 3 when you can just download it straight to your console? This new dynamic has been a real problem for GameStop, which is why the stock plunged from $46 and change last November, right at the start of the holiday season, down to $31 and change today. Now, last week I suggested that the company's latest quarter, reported at the end of March, was disappointing. And that wasn't fully accurate. I take full responsibility. The last quarter was fine. It was the guidance, okay? GameStop's guidance for the next quarter was terrifying, with the company forecasting high single-digit same-store sales declines and weaker than expected earnings. So how does GameStop solve this video game dilemma? Increasingly, they're doing it by moving away from video games. Companies already built up a big business in collectibles, so-called loot, and for the last couple of years, they've also been acquiring AT&T cell phone retailers, including an agreement last month to buy 450 to 500 more AT&T stores. They also own a chain of Apple retailers called Simply Mac. Now, lately, GameStop has been one of the most heavily shorted stocks out there. But at these levels, with the stock trading at just 6.7 times next year's earnings estimates and a company sporting a juicy 4.7% yield, you can make the case that it represents real value here, especially given the shift away from video games. So in the wake of the company's annual investor meeting earlier today, let's check in with Paul Raines. He's the CEO of GameStop, to learn more about how his company's doing and where it's headed. Mr. Raines, welcome back to Mad Money.
Thank you, Jim. It's great to be here. I'm feeling great after a great investor day today.
All right, so, Paul, you're doing a very big transformation of the company. There's a lot of talk about what the company will look like in 2019 versus now. Why don't you, if you can, tell our viewers how much GameStop is going to evolve over that period?
Sure, Jim. First point I would make is we're coming off a record net income year. You know, our store contribution, profit contribution increased 23% over the last 2 years. So the first point I would make is GameStop is in great shape in our GameStop branded stores. But of course, we're in a software business that is cyclical, and there is some migration to digital, and we recognize that. I think the things we've done to improve our performance is we've created 2 new billion-dollar businesses inside our stores, and those are digital and collectibles. And then outside our stores, we've got this great technology brands business, which is our AT&T and Apple partnership. So we think we've got great results from last year, and we think we'll have pretty good results through 2019. I mean, this year that just passed, 25% of our business was non-physical gaming, and by 2019, it'll be 50%.
All right, well, Paul, when I went through the previous quarter, I mistakenly said that I said it was a weak quarter. It was not a weak quarter. But the guidance did give a lot of people, let's say, raised eyebrows, because it seemed out of sync, particularly if you continue to buy back the amount of stock that you have been buying back. It would seem that the number could be revised upwards. It's been some time since then. Is that a correct approximation of what could, not necessarily will, but could happen?
Well, certainly I think that's generally correct. You know, the first quarter, we're overlapping some pretty significant titles, and we had a title shift out of our first quarter. Uncharted 4 from Sony moved out of our first quarter, moved only a few weeks, but that put it into our second quarter. So that creates a challenge for us on the first quarter guidance. We're also overlapping an 8.6% comp rate last year. So, you know, Jim, those are in retail. Those are things you have to deal with. But our overall yearly guidance is solid. We believe the back half will have A, stronger title lineups, but B, launches of several technology products in our phone stores, including the new iPhone. So we think that the full year is solid, and we think the back half is very bullish once we get past this first quarter.
Paul, I know some of your stores are in the mall, and I've been hearing somewhat, let's say, disconcerting stories about traffic in malls, not specific to GameStop. But have you noticed a decline in traffic in the month of March in some of the malls that your stores are in?
You know, there is declining traffic in some malls, but our stores in malls are doing very well. You may know, Jim, you know, we've de-emphasized malls in our GameStop branded stores because we've already built a great brand, and we've moved a lot of that traffic to strip centers adjacent to malls. As far as our other stores that are in malls, they continue to see very solid traffic. I mean, don't forget, we had a record net income year last year with very solid, I think we were 3 to 4% comps. So that says, you know, that we've had pretty solid traffic. Other retailers, of course, have had difficulties, but that's not us.
Now, you have 2 terrific partners in Apple and AT&T. How are those relationships going?
Sure. Relationships are excellent, Jim. I mean, today in our Investor Day, we had the president of National Retail for AT&T. Brian Shea came and spoke to our team about the importance of the relationship with us, and our Apple relationship is great. I think what's interesting, Jim, is over time, our relationship has gone deeper with AT&T. You know, we're over 1,000 stores now, but it's also gone wider. We're merchandising DirecTV and Digital Life, and we're talking about some other media properties. They're migrating to being a media company, an integrated provider of media, and we're, of course, looking for growth to be a great provider of distribution. So it's been a great match.
Well, I was glad you brought it up, because where I'm going to is at AT&T, the stock has had a remarkable move. And a lot of it is attributed to the fact that DirecTV football package is just much more popular when sold together with AT&T. Are you experiencing that surge, too, from NFL?
We are. We're selling, Jim, thousands of DirecTV packages every week, and it's been a great addition. You know, one of the reasons we got into the partnership with AT&T many years back was because they showed us that the future was not just wireless. The future was going to include peripheral products, add-ons like DirecTV, like Digital Life, like some of the other properties they'll be announcing. So yeah, it's been a great win for us. And you know, our team does a great job in store and reduces churn, and we continue to drive a lot of growth for them, and they like that. It's a match made in heaven a little bit.
Are there some movie titles or game titles that are making it so that Loot is doing well?
Yeah, I think there are some important titles coming up in Q2. Uncharted 4 will be a blockbuster for Sony. It'll be fantastic. You know, the other point, Jim, we can't forget is virtual reality is on its way. Right. We saw Oculus and HTC come out, but we believe the leader will become Sony. We saw Sony VR demoed in our show today, and we saw a list of titles. It's really compelling. That'll come out in the second half of the year, and that's part of what our growth plan is for the second half of the year with Sony as well.
Well, I want to thank you, Paul, for coming on and outlining the Investor Day, and a lot of this terrific stuff is online. It is always good to see you, sir. Paul Raines, CEO of GameStop. Thank you.
Thank you, Jim.
Good yield, value play. Mad Money back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.